Hello everybody, and welcome back to Top 5 Finance. Today we're going to be going over 5 stocks which are a potential buy for August 2020. As I'm sure you are all aware, almost all stocks bottomed in March because of the pandemic, and some experts believed that recovery could take some serious time. Luckily, they were wrong. The market witnessed a fast and excellent recovery, and almost all major stocks were back on track sooner than expected. As of now, Wall Street is doing well enough to make investors look for opportunities. Stocks are looking for new highs, and investment opportunities are vast and diverse. However, it has been a difficult job for many to find the right stocks to invest at the right time. That's why today, we are going to be going over 5 stocks that we are watching as a potential buy for August 2020. Let's get into it. Facebook. 2020 has undoubtedly been a tough year, but not for the tech markets. As more people are working from home and using technology, most companies have quickly bounced off their March bottom and are approaching, or creating, new highs. Facebook has grown to be the leading digital advertising platform alongside Google in the last few years. The rapid growth makes the platform stand tall in the list of tech leaders. As far as Facebook's profits are concerned, the numbers have been doubling year over year. 18% growth in the first quarter of 2020 signifies that this trend will likely continue for coming years. Facebook's stock was worth $146 per share in March, and its current price is around $240. And guess what the forecast for year's end was? The intense growth proved the experts were wrong, as they expected yearly close at a measly $166 per share. The stock is already 44% past their prediction. As we all know, Facebook owns Instagram and WhatsApp too. The company's active monthly users are more than 3 billion. The company has grown insanely as far as its active users are concerned. But active users are not the only drivers. Average revenue per user of Facebook also has a factor in the company's rapid growth. There has been an 11% growth in the company's users in the first quarter, and average revenue per user rose 8.3% from $6.42 to $6.95. The growth pattern in the first quarter of this year makes Facebook worth buying, as these uncertain times prove to only help the company. What would be the expected yearly close at this pace? Experts believe it could be around $321 per share. Would you consider investing in Facebook with such expected growth? Let us know in the comments section. Newmount Corp. Second in the list is Newmount Corp, an international gold mining corporation. The corporation was listed among the stocks worth considering in 2020 by US News. As we are halfway through the year already, the nomination is still valid and doors are still open for investors. Gold price is back to 6-month highs, and we know when the underlying commodities price rally, such companies generally follow suit. What makes NEM worth buying are the industry-high gold reserves. The company has roughly as much as 100 million ounces of gold in reserves. The company shares are already 40% up in the first 6 months of 2020. Where will this year end for NEM? Only time will tell. However, 19 analysts were opinioned regarding 12-month price forecasts, and they have 73 as a median target, with a high estimate of 97 and a low estimate of 57. It is really up to the investors how they see it. For me, NEM is definitely staying on my watch list. iShares Edge MSCI Minvol Fund, USMV. Next one on the list is USMV. If you're an investor and want to step in the stocks with some patience, this one is a buy for you. USMV neither makes you a millionaire overnight nor eats up all your investment. USMV is less risky as it has a diversified portfolio of low volatility stocks. USMV has a low expense ratio of just 0.15%, while its dividend yield is 2.1%. The fund has done better than 91% of all the funds in the same category. Although the ETF has almost 200 holdings, most of its weight is in less risky stocks like Verizon, McDonald's, and Waste Management. USMV went as low as $46.61 per share in March, but it regained its strength in the following months. the current price is over $61. According to walletinvestor.com, the 1-year prediction is as high as $66.92, and in 5 years, the price could be around $87.20. In case you want to invest in a safe ETF this month, USMV is the best choice with reasonable dividends. eBay. In online shopping markets, the biggest name is Amazon. However, this pandemic has brought more value to all the online shopping markets regardless of their volume. There is no doubt that Amazon is far ahead of eBay in business volume. Yet, the latter is up for a promising future as far as its growth is concerned. Experts expect growth of almost 10% annually for the next 5 years. The expected growth makes the platform an attractive choice for investors. Not only is its future promising, but its recent past and present give the positive signs too. The online platform has seen 38% compounded earnings per share in the last 5 years. What makes eBay look even better in these times is their current sale of StubHub. StubHub is a ticket exchange previously owned by eBay. It was sold for a handsome amount of $4.1 billion. As the live sport, concerts, and other entertainment options are currently on hold, it is undoubtedly better to have some cash rather than a ticketing company. According to FinanceHill.com, based on the share price being above 5, 20, and 50-day exponential moving averages, the price trend is currently bullish, and the stock is experiencing slight buying pressure. Are you comfortable with 10% growth for the next 5 years for your portfolio? For me, eBay is a strong pick for this month. Fiverr. Last in the list for investment in July 2020 is an online freelancing platform, Fiverr. Fiverr is a platform widely used by sellers and buyers for freelancing jobs. The company has been growing at a constant speed over time already. However, the recent wave of sudden unemployment has added more fuel to its growth. The platform is equally useful for all sorts of freelancers, including graphic designers, content writers, web developers, and many more. The social media boom has also revolutionized the advertisement horizons. Hence, there is an increase in demand for freelancers. With 38 and 30% expected growth for the next 2 consecutive years, Fiverr is the highest flying stock in the list. Fiverr has been upgraded to a Zacks rank number 1, which is a strong buy signal. The Zacks rank shows how the market feels about the company's earning prospects. These sentiments are not without reason. Fiverr's 52-week low has just been $17.11 US, and its current price is $85. That is an insane 5 times growth just in the last year. As far as its future perspectives are concerned, WalletInvestor.com believes that the share price can surge up to $133 US this year. Are you planning to invest in Fiverr for the next couple of years or even further? Let us know in the comments section. So, that about wraps up our video on 5 stocks to buy in August 2020. Of course, this is merely our opinion and shouldn't be taken as financial advice. Invest at your own risk. Regardless, which of these stocks do you think are the best going forward? Let us know in the comments down below. Otherwise, be sure to click the link on screen to check out another one of our videos. With that, thanks for watching, and we will see you in the next one.